The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. I started the show by posting a chart of the hourly Treasury bonds. We're moving up into this 134 area. We expect them to get into the 137 to 138 level in the next few weeks. That would equal the move that we had last year from April through May. I want to ask everyone, to open their pocketbooks today. We're going to take a collection up. Eric Batista, he was one of the richest men in the world with $34 billion, is now down to a millionaire. And so I think it's only fitting that everybody here at TFNN chip in and maybe we can get him back on the right track. There's a lesson here, folks. The smart man learns from his mistakes. The wise man learns from the mistakes of others. I highly recommend that you go to Bloomberg. They've got some articles on there. I think they even have a book out. It looked like a magazine for Bloomberg Magazine about the story of his downfall, and we will all learn something from it. I already know the story because I've written it twice myself. But if you'll learn that, you'll really be able to understand, what happens to people when they lose a lot of money. Because believe me, when you lose a lot of money, that doesn't mean very much because you always know you can make it back. Losing it is really simple. You just average down to losers, don't use stops, over leverage. That's a really simple thing to do. The making the money part is harder. So someone that can make that kind of money will come back, but he has to rectify the mistakes that he's made. So I highly recommend you go to Bloomberg and try to find the articles that are written about him and see the mistakes that he's made. It'll be like a rewrite of the book by Jesse Livermore, Reminiscences of a Stock Operator. I honestly have read that book a minimum of 50 times, and I'm not joking, folks, a minimum of 50 times. And it's just an incredible book also, but I highly recommend to understand what happened to Batista and, his ideas. It's one thing to have an opinion, but you don't want to have a wrong opinion. Like Paul Tudor Jones says, it's easier to change your opinion than it is to to change your mind. It's easier to change it's easier to change your opinion than it is to lose money. So that's a smart thing that you want to try to learn to do. At the break, we're going to have a guest, of course, Rich Anderson. I've asked him to come on because we had a major crop report in the grains on Monday. As most of you know, the market was hit pretty bad by it. I'd like to get Rich's ideas. And also, I wanted to mention that we're having a new moon coming up on October the 5th. This is the culmination of these transits that started on the 2nd of October. They go into the 5th, 6th, and 7th of next week. So that would be we'd be looking at the 7th, which would the full moon comes on a Saturday, so you want to watch the 7th and 8th day for a key point in the market. My assumption is if we close really badly today and tomorrow, is that we could be looking at something really nasty coming in on October 7th and 8th. So that's what I would be looking at. So we'll have to just see what's happening with it at that time. But right now, it's not much we can do other than to see where the market's going to to drift down to. We're down to some pretty key Fibonacci support down here at the 1662 level in the E-mini S&P, and whether that holds it or not, we'll have to wait and see. We've had some tremendous moves in these commodity markets, folks, over the last few days. As you probably know, we had gold, down 50, up 40, stuff like that. And remember what Thomas Jefferson, any country that can take everything away from you, or that can give you everything, can certainly take everything away from you. And that's what these markets can do. They give you $50 one day, and they'll take $40 away the next day. So you've got to be really nimble, follow your trading plan, protect yourself at all times, and do the best that you possibly can as far as risk management, because we never know where the markets are going to go. This volatility that we're having is just it's just totally phenomenal, folks. You just cannot believe this volatility. Well, I can because I've seen it before, but this is the kind of stuff that markets are made of and really makes it a lot of fun. Now, along with the new moon that we have on October 5th, I mentioned the transits that we talked about that started on September 19th, which was the full moon. And it culminates over the weekend and on Monday and Tuesday on the 7th. And transits means it's like those Pesavento index days that we have where you have a whole lot of things happening at one time, like 14 or more aspects or 3 or less. And these are the things that are happening with the ones. The difference is that we weight them a little differently with the software program that we use to tell us that this should be something pretty dramatic. It's also a Bradley stock market date. And so it's going to be really interesting coming in on Monday. I'm really looking forward to the show to see what happens, at that time, and we'll see what goes on. Now, the next chart that I wanted to bring into the Tiger TV today is the chart of copper. As you can see, I put the cash S&P index overlaid on the copper chart so that you can see, how since January of 2013 stocks have gone straight up and copper has basically gone straight down with lower highs, all along the way, and that's usually not a very good sign, when you see something like this. If you notice, what's really interesting is that big triple top that is up in the S&P cash daily. And that is a very ominous pattern. We've been talking about it since it started forming in May. And even though it's made higher highs, it's far lower now, than it was in May. So that's another indication that something, pretty dramatic could be happening, with these things that we're watching in the commodity markets, and then also, the stock market, because they're all interrelated. That's for sure, without any trouble. Now, we mentioned on the other, this is not a commodity, but it's worth mentioning because we talked about it on yesterday's show, was the VIX index, that we were expecting it to have a pretty good move up into the area, very near the 20 level, as I recall, or just a little less than that. And we're very close to this level right now. We're only about a point and a half away, so another couple of bad days, and the market would certainly fulfill this particular pattern that we have, which would come up at around just under $20 in the VIX index. So the fear and greed indicator is back at work again. It's amazing that when it's on its bottom, it doesn't work, but when it's on its top, it's working. So it just works all the time. The problem is that it doesn't work every time, and there's a big difference between working all the time and working every time. Because if you think it works every time, you're in big trouble. That's the main thing. Now, I want to move to the next thing I wanted to move to would be the very first commodity that we want to look at, and that's the soybean market. After that, we'll take a look at the corn. But we talked about the soybean market several times here over the past weeks and months about the big double top that was up here. If you'll just give me a second, I've got to draw in the pattern so that we can see it clearly enough, because we're very close to a pretty good bottom, I believe, in Treasury. I got Treasury bonds on my mind. We're very, very close to a 61% retracement from the double top in the November soybeans. The number that I'm looking at is $12.55 per bushel. That goes back to the highs that we made way back in 2012. It's also a perfect 61% retracement, coming in off of the low that we made, when the right before we had the bad weather that occurred in early August. So all we're doing now is correcting 61% of that. So that'll be some. This is by far the strongest of the grain markets. The corn market is certainly has not done very well at all. As a matter of fact, what we'll do now is we will take a minute here and pull up the corn. And here it is. If you'll just give me a second. I'm going to do the weekly chart because I'll start with the daily because you'll see where we are. We're coming down to new lows every day. And all we've got to do now is just wait for it. We're up a little bit today, and we have a first sign of a potential bottom, but it's still a little bit early. So I'll put the chart in on that. What I have to mention something here is about 2.5 months ago, Mr. Z in the Tiger Den John sent me an email with his workup on December corn. It was trading at around 525 at that time, and he projected it would come down to right near 425 a bushel, and we hit 434 a bushel yesterday, and so we are very, very close to that particular spot that he was looking at. So what we want to be doing now is we'll start to try to find a place to get long the corn without risking an arm and a leg, and that's the whole key, is to not risk very much. The fundamentals on corn have changed because they are expecting one of the biggest crops ever, but believe me, that crop will be needed because the supplies were bad over the past few years, and people are starting to stockpile corn again. And so, when it was at $6 a bushel, everybody wanted it. When it's $4.50 a bushel, nobody wants it. So that's there's a big difference. And you got to remember the old commodity saying: you got to buy them when they're crying and sell them when they're yelling. It's the old adage that Mark Mobius talks about from Templeton Funds, that you have to buy when blood's in the street. And I agree with that 100%. Just as long as it's not your own blood, that's the key to the market that I'm looking at. Now, I wanted to show another chart that I think is very important because it shows the grain markets very similar to what we're looking at in corn and also in the wheat market, corn, beans. And the last one I want to talk about, of course, is the wheat market. And you can see that we have some really nice cycles there. They're 83 weeks long. And that bottomed in August, and it has not made new lows. You see it's actually started to move higher, which is a really good sign. So if you want to get ready to buy grain, you want to be ready to buy the wheat because it's the stronger. You always want to buy the strongest and sell the weakest. In Jesse Livermore's book, Reminiscences of a Stock Operator, and I'm sure Eric Batista will put this in his book, he says, don't be afraid of high prices, folks. They're there for a reason. And don't be afraid of low prices, folks, because they're there for a reason. That goes back to the technician's motto, live by the price of the bar. If the price of the bar is going up, there's more buyers. If the price of the bar is going down, there's more sellers. That's true of the 5-minute chart, the weekly chart, the daily chart, or the yearly chart. All of those are the same. So that's what you want to keep in mind, when you're looking at some of these things. So that's wheat, corn, and beans. Now we want to move on to crude oil. I'm trying to move through quickly because I want to keep Rich on as long as I can today because he has some really great information on things that are happening in the markets, and he's tuned in to many of these hedge fund people and market wizards that we've known for many, many years, and it's really a pleasure to have him on. Now, we just completed just 2 days ago, we just completed a 382 retrace. Well, we got to take a break. Wow, the time goes fast. Okay, we got to pay some bills for Mr. O'Brien. 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks, and I am going to talk slowly. Okay, maybe a little less slowly than that, or more than that, but I'm going to try to slow down. Just had a lot of stuff to cover today, and I tried to cover it too fast. And we've got Rich coming on at the half hour, so that'll be good. The next chart that I posted into Tiger TV is the chart of sugar. It's a 110,000-pound contract of sugar that trades for around 18 cents. We had a head and shoulders pattern towards the end of August that we were talking about. It was very, very symmetric. The lows between June and July were absolutely perfect to the lows in July and August to the exact day. And the retracement that we had in August was an exact 786 coming in off of the low from July 15th. The high in August, it came down right to the 786. And from there, it's had a 20% move in the past month. And now we're reaching a 786 retracement on the upside at around $18.40 per pound in sugar. The high price on sugar historically, I believe, was 1966. It hit, it was 1970, I believe. It hit $66 a pound. And now, of course, there are a lot of substitutes and stuff for sugar and synthetics and stuff. But this is still a very, very low price on the weekly basis. If you take a look, and we're going to do that, is to look at the weekly chart on sugar, and you'll be able to see that, we are in a very, very long-term bear market in sugar that has hit 61% and 786 retracements several times. And all we've done now is just make some type of what we think is a pretty significant bottom where we should have some pretty good movement, coming in here. We've got a call from John in Philadelphia. You must have been listening to the show, John.
Larry, good day.
How are you?
Sir.
What can I do for you, my friend?
I wanted to ask you, you made a comment just before the last break. You mentioned a trader's rule that applies here, and hence a question for me. You mentioned the trader's rule about when selling short to sell the weakest of the bunch, not the strongest, or something along those lines.
Yes.
Larry, you and I spoke a week ago Monday talking about the potential for the S&P topping, having had topped, up at that 1729 level, and then focusing here the first, second, third week of October for cyclical weakness. Now, the Dow obviously is respecting that weakness. It's just been going down, down, down. Nothing dramatic, but, after 10 days, it's down a bunch. In contrast, Larry, I know you look at this, the NASDAQ Composite, the COMP, it made a new record high yesterday. It's given a fair amount back today, but it's, high yesterday. My question, if you're shorting here, looking to speculate on further weakness Friday into next week, can you share the rules of thumb that would dictate your thinking as to whether you'd short the Dow, which is already down a bunch, or short the NASDAQ Composite up here at 3755, which is just off the highs?
Well, from just what you mentioned, you should sell the weakest, and so you should sell the Dow Jones stocks because they're the weakest. I mean, why would you want to sell the strongest? One of the things I've done in my career was being an expert witness. During the time when I was going through a divorce, I didn't trade for that 9 months, and so I worked as an expert witness on legal cases. And I would go over statements, and invariably, people do crazy things. If they have things in their portfolio, they sell the strongest things and keep the weakest things, especially if they have a margin call. They sell the strongest things and keep the things that are not working, which is the absolute wrong thing to do. Keep the things that are working and get rid of the things that are not working. That's what the politicians are trying to do now with Obamacare. They're trying to, take out the things that they don't think will work and put in things that will. So I just use that as a gauge. But believe me, John, it's really hard to follow because when you're in a position where you have something and it's not working, and you've got everything that says, oh wow, this has got to be it, and it doesn't working. It's a testament to your psychology, and your psychology's on the line, and it's not an easy thing to do. So my assumption is that just be real careful. When you get rid of things that are hurting you, you want to get rid of those things and keep the things that are doing you good justice. That's what I would do. John, we got to run.
Thanks for that comment.
Can you hold till after the break for just a second? We got Rich after the break, but I'd like to talk to you one more time.
Thank you.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest. And Hertz Global has a core position for 6 months before exiting the position. A current position, entered as a turnaround company with good technicals based on Basil's waveform, is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to the Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to the Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and I believe we have Rich Anderson of Anderson Capital Management on the line now. Rich, are you there?
You bet. Hi, Larry. How are you doing?
Well, how do you like in this volatility, my friend?
Well, that's what we live for, is to trade volatility. I mean, that's the only way we make any money.
This is true. We finally got some coming back. Tell us what you see happening in the markets, Rich. I know these markets, gold gold up 50, down 50. It's just really amazing. What are you seeing or hearing?
Well, gold was down the other day, got down to, 1285 and change. And they were saying, well, it's because China's on their Golden Week holiday, and so there's not much buying out of China. And then the next day we're up. And then today we're down. There's just lots of uncertainty that have been added to the markets from the impasse we have in Washington. And the real question is, how long does the impasse last? And the debt date of October 17th is an important one to be focused on. But before that, we have October hogs go off the board, 10th business day of the month of October, and how are you going to settle cash hogs if you don't have USDA reporting the cash prices? So the CME's got to work that little detail out. What are you going to use as your official prices for a cash market? Well, there's just lots of interesting things that are going to go on. Usually in negotiations you have compromise. Mm-hmm. But here we have people that don't seem to be willing to talk to the other party. They just seem to be willing to give speeches and call people names. Kind of sounds like grade school to me.
Unfortunately, we have to live through the grade school. That's the hard part. Rich,
Right.
talk to me about the corn market. I've been looking at the corn market for several weeks as we've chatted on the on the phone before. But tell me what you're seeing in corn as far as potential for a rally here. I mean, they've really hit it hard. We're making new weekly lows, challenging where we were in 2011. And I know we've got a large crop happening, but what are you seeing?
Well, there hasn't been a lot of export business, even as the prices have come down, although I would expect that to start to pick up shortly. The basis, which had been, a buck and a half over the futures prices during the summer, is still, maybe 25 to 30 cents over the board price right now for delivery in the first 2 weeks of October. The harvest hasn't brought in the corn quite as fast as the commercials had originally thought. A week ago, they were bidding 25 under the December futures, and now they're paying 25 over for the first half of October. And then they go to under for the last half of October. The export sales need to pick up. They will as the basis, as the cash corn gets under the futures. That's one thing. The other thing is everybody in the world's short corn. But we've got 4 or 5 days of solid rain. They're talking 2 to 4 inches through most of the Midwest, and that'll just really grind harvest to a halt, and probably will allow the corn to have some kind of a short covering rally, if nothing else. And then we'll have to wait and see the next 5-day window of good harvest. If the prices drift back down and they hold, we probably put on the bottom. It's very typical for the corn market to make a low in October and often in the first week of October. And think back to how nobody liked the nobody liked the wheat 2-3 weeks ago. It got down in the 630s, and now everybody likes it. Well, the report came out and really ignited it when it said that there was more wheat feeding and less corn feeding. That isn't going to be the case in the future. When wheat's $2.50 over corn, they're going to be feeding corn, not wheat. Trust me on this. The other thing is that the ethanol, with the lowering of the price of corn, ethanol profitability has gotten much better. Actually, cash ethanol in Illinois was under $2. It was at $1.90. Of course, then you add in taxes, so people don't wonder why it's so much cheaper than gasoline. I mean, that's the ethanol price before you add taxes to sell that at the pump. But that profitability will create more demand for the corn. And then as the cash price gets cheaper, the board doesn't necessarily have to get any cheaper, but the cash, the basis gets cheaper, so the cash price gets cheaper. I expect the export business to pick up. There's been fear of planting harvest delays in the Caucasus region of Russia and Ukraine, where they planted 16.5 million hectares last year, and they're only at 13 million so far this year. And then you had a freeze down in Argentina, and they've stopped exporting, and so Brazil's been buying a little wheat, so that strengthened up the wheat market. But eventually, wheat and corn are kind of tied together indirectly because they substitute feeding for each other, and you won't see that substitute of feeding from the wheat with corn at these levels.
Well, wheat has had wasn't affected very much by the report, of course, because it's had a pretty strong rally from that area. That's good. Rich, I have a question. What is your feeling about on these politicians, of how they react to fear? It seems like the only time they pass a vote is when the stock market gets hit by 400 or 500 points, and then they all of a sudden realize that they better do something, or the constituents are going to start screaming. Do you hear anything like that amongst your friends?
Well, I mean, you had our leader have an interview with
hey, Rich, he's your leader, he's not mine.
Reporter yesterday, and the essence of his interview was, the market needs to, get spanked a little bit so people get concerned. I mean,
that's what I think is going to happen. Yeah,
that's not negotiation. That's intimidation. That's trying to talk a market down. They need to come together. They certainly before the debt limits. October 17th, give or take a day or two, is what everybody seems to be talking about. But we've had financial repression for the last 5 years where, if you're a senior citizen and you're counting on that $200,000 or $300,000 you've saved to give you 5 or 6% interest so that you can augment your Social Security, and you're getting 1.25%. I mean, that's been terribly hard on the savers. They punish the savers to recapitalize the banks. because they get to borrow that money at that cheap price and then lend it back to the government and make the spread with no risk.
Yeah, that's I can understand that, because being in that senior citizen category, I don't have the $200,000 like you do, but I know what it's like to have your $100 in a passbook account at a little less than 1%. That's not a very comfortable feeling.
No, and it distorts. It forces people out of money markets and stuff, and into the stock market.
Rich, what do you feel about the commitment of traders? We've had a really bullish commitment of traders thing for corn this past month, and yet, the corn, got hit really bad with the report and everything. So I was curious, do you follow that very much, or what's your feeling on that?
I follow it somewhat. I when I see a setup, a situation set up, I still look for some kind of a entry trigger from the market action to coincide with it. And, we're going into harvest, and that's the overriding fundamental that's driving the price of corn down. But if all of a sudden it rains for 4 or 5 days and there's nobody harvesting, and the corn market starts to go up a little bit, and then it starts to really get going, as people unwind wheat corn spreads, that open interest will change very rapidly. The other thing you've got going is you've got the roll, the 1 year roll that's going on in the beans right now. They're selling their November 13th and buying their November 14th. Some of these funds are. But I would expect that sometime between this week and the third week of October, we'll put our low in on the corn. The other number that everybody talks about is the June 2010 low at 398 and a quarter. I personally don't really think it'll get that low. I mean, elevators are offering free storage. Farmers are well funded and have, are fairly comfortable, have plenty of cash on hand, so they don't see any need to sell right at harvest. Corn, unlike soybeans, you can just pile it on the ground. If you drive out into Minnesota or South Dakota a month from now, you'll see these giant piles of corn on the ground with, 3, 4, 500,000 bushels. And then some of them get tarped and some of them don't, because it stores fairly well. The only consideration is that you've got to move that grain in the spring before the weather starts to warm up, or then it might start to spoil. But during the winter, it can just sit there and it's not a problem.
Rich, do you remember when we first started trading, when we first met each other 40 years ago, corn was in a 3-cent range for the week? It would stay that way for months and months?
I know.
$1.15, $1.20, $1.25. I mean, it was just really amazing. And you look at the prices now, it moves $1.25 in 2 or 3 months now.
That's why I believe you have to be a technician, because the first start of the rally in wheat, as an example, was on the idea that, there was more wheat feeding than we expected. And then it's about, Brazil's buying more wheat from us. And by the time everybody knows these things, it's already in the market, and you need to be looking for the failure and when it's going to go the other way. And everybody knows we've got a big corn crop. Everybody knows we're in harvest. So if you have harvest delays, all of a sudden those people who are counting on all that cash grain to come to market, it won't be there. I mean, the best example is on Friday afternoons, just before the close. That's when typically elevators will sell some extra grain, anticipating that they'll buy it on over the weekend, late Friday and Saturday, and sometimes in Sundays. And now, with this weather in the Midwest slowing up the harvest, there may not be that selling on Friday afternoon, and they'll reach that little inflection point where there'll be just enough people that were expecting the selling that don't get it. They're disappointed, and all of a sudden, they're getting out and paying up, and then starts the ball rolling the other way.
Well, that's good. Well, listen, I want to thank you for coming on the show, buddy, and we'll have you on in a few more weeks unless something really dramatic happens in between, and then we'll have you on sooner.
All righty. Sounds good.
Take
care.
Bye. Thank you. That was Rich Anderson of Anderson Capital Management, and he's been our good friend here at TFNN for quite some time, and we're always good to have him on the show. He's in contact with many of the folks in the hedge fund business, and certainly understands, several of the market wizards are his accounts, because he also does brokerage through R.J. O'Brien, and so he has a really strong feeling for these folks of what they're doing in the markets, and it makes it makes it very, very interesting here. Okay, now the next commodity that we wanted to go to here, if you'll give me a second, we will just take a quick look here. I would like to shift the thing over to the. Oh, John, are you still on the line? Oh, I thought that.
Just listening patiently.
Oh,
no further questions.
Wow! I asked if I could get Rich on because he had to hurry. He had to get out of there by quarter till the hour, and so I had to, and Rich can talk forever, as you probably know. So because he knows so much, that's the good thing. So anyway, what can I do for you, my friend?
No. You wrapped it right up with him. Thanks so much.
Okay, thanks a lot for calling in, John, and keep those wonderful trade ideas coming into the Tiger TV because you have some beautiful ones. I tell you, I watch them, and I wanted to thank you for the heads up on the gold the other day when it was down at 1280. He sent me an email just as it was happening that it was a major fib point, on the weekly basis, and sure enough, it was just spot on. Right at the place that it was supposed to come to. I'll put that chart in here because it was really a beauty. And remember, he gave me this before it happened, folks, and that was the real beauty of it because that low we made at 1275 on the gold the other day was exactly 61% of the Fibonacci number at 1177 that we made back at the end of June. So if we go below 1277 now, we'll be looking at some really, really strong moves down into the 1230 to 1190 area in the gold if it holds. Now, I wanted to show you something that we've used several times here at TFNN, and that is we compare the relationship that we have between the gold and the silver. And you're seeing something that we've seen happen before, and that's a divergence happening between the silver and the gold. And I'm going to put that up here and use a 60-minute chart so you'll be able to see the last 2 months trading without too much time. But what you'll notice here when you look at this, the red line will be the gold line, and I should have made it. I guess I should have made the gold line gold, but I didn't. But what you're going to see here, I want to show this divergence in here because you'll see that we've had lower tops in corn. Got corn on my mind. Sound like. Glenn Campbell. Anyway, we've had lower highs over the last 7 trading days from starting at 220, and each of the highs have been lower. But in gold, we've had a higher high breakout above the high that we've had over the last few days. Now, this is going to be an interesting phenomenon because the last time we've had divergence like this, it signaled that there was more weakness coming in the overlying markets of both of them, gold and silver. So whether this is going to happen or not, I don't know. I'm a technician. All I can do is observe things that I'm seeing happen, and I can see now that we've had lower tops in the silver, whereas the gold has actually exceeded a couple of those tops, and so that tells me that silver is far weaker. That goes back to the question that John asked us at the break, and that is, if you're going to buy the weakest, that's the wrong thing to do. You want to buy the strongest and sell the weakest. If you ever get a margin call, God help you if you do, because that's not a fun thing to do, and you never want to meet a margin call, that's for sure. Okay, folks, I'll be right back after the break. We'll talk a little bit about margin calls. I think it's important, given Mr. Batista's predicament.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, I was talking about margin calls. That's not a nice thing to happen in our business, but if they do happen, the best way to do it, folks, is to don't answer a margin call. Just liquidate the position, because you're just going to be throwing bad money away, trying to find good money, and that's not going to happen. Because if you have a margin call, 2 things are happening. One is you're increasing your risk exposure. Second thing is you're short of capital. And then the third thing that is even the most important is your analysis of what's happening in the market is totally wrong. So don't answer a margin call. Get out, think about it, and you'll be just fine. I remember a customer. He was a private detective. I can't remember Dick's last name, but he used to come into our office at Drexel, and I had very few people that were allowed to trade their own account. Almost everything was traded under a managed account, 95% of it. But there were a few people who qualified as traders to be able to do it, and Dick had been short Treasury bills for a long time because he really thought that interest rates were going to go higher, and yet they wouldn't go higher, and they wouldn't go higher. And then finally, and this was sometime in 1980, just when interest rates were ready to turn, he got a huge margin call, and he was down about $800,000 in his account, and he had a margin call for like $500,000. And he said, and I talked to him about this. I said, why don't you just think about it for a couple of weeks and then do it? He said, no, I want to reverse my position. And I said, boy, that's really unusual. So he put another $500,000 in, and the next thing happened. 2 months later, he had made all of his money back, and he proceeded to make about $11 million over the next 4 or 5 years, just being on the long side of Treasury bills. We've got a call from Mike in Toronto. Mike, are you there?
Yeah, thanks for taking my call.
My pleasure. What can I do for you, my friend?
West Texas Intermediate Crude Oil. You forgot to talk about it before the intermission.
Okay. Basically, what happened was I get excited when I have Rich on the show because I know he's got a lot of important things to say. It made a 382 retracement down there at the 101 and change level on Monday. When the markets were first under pressure. And so
do you have any charts?
Sure. I posted one into Tiger TV. I'll put another one in even before before the end of the show, of course.
Yeah, give me a weekly.
A weekly? Sure. That's 25 cents extra, Mike.
The check's in the mail.
Okay. Yeah. Well, I've heard that one before too. Actually, my wife is in Toronto right now. She's visiting her sister. We've got a new grandkid in the business. And it's getting ready to start his own trading here pretty soon. His first trade didn't work out good because I bought him J.C. Penney and quickly lost him $1,000. But I'll put this in here right now, and we will see the long-term weekly chart of crude oil, and that hit that 707 retracement. We've been down for 5 weeks. That level that we hit on just the other day at the 101 level was the 382 retracement coming off of the low that we made back in the summertime. And so as long as that 101 level holds, Mike, I think we've got a chance for a rally in crude. I don't know if it's going to be able to take out 112 because that 112 level has hit 3 times over the past 3 years. So there's a lot of resistance, at 112 in the crude oil.
If it breaks 101, what's your downside target?
My downside target, the first target would be $96 a barrel. That would be my first target. It would be $96 a barrel. But,
and when it punches through there, how far low do we go?
Well, we could go all the way down, and still be bullish. We could go all the way down to $64 a barrel.
Beautiful.
That's that would be
low.
Hey, don't confuse beauty with my opinion, my friend. all that 64 is a 61% retracement of the whole move. That's it, folks. Thanks for calling in, Mike. Live every day in an attitude of gratitude, and may God bless.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.